What's going on, everyone? Welcome back to Let It Grow Investing. I am Jeff, and thank you very, very much for being here. We've got tons of earnings news coming out this week. We've got a lot going on with the election. We got tons to cover. And hopefully that gives us a little bit of clarity about what's going on in the market, what we can expect going forward, and kind of where we're sitting right now. Last week we were talking about, a jobs report coming out, a PCE report coming out, all the earnings that were on tap from some of the Magnificent Seven, a lot of big players in the market, and really what's been going on this week. First up, I did want to get into the PCE. That was looking like it had actually increased 2.1%, right on target with the Fed's 2% target rate that they were looking or aiming for. So that is cooling. We are getting some of those inflation numbers coming down. We are still looking at a fairly strong economy. People are still spending. This is from the New York Times. Inflation slowed in September from a year earlier, though some signs of stubbornness lingered under the surface. We got food and fuel costs to give a sense of underlying trend in prices was up 2.7%. So that core inflation figure was unchanged from the previous reading, a sign that was proving slow to cool. So core, without food and fuel, is still up a little bit more than we were looking for, but overall, the numbers are coming down. So that is nice to see. We did have that jobs report, man. The jobs report was painful. We were actually only looking at 12,000 jobs being added in, I guess that was September's numbers or October's numbers, and we were aiming for like 140,000. So a big miss there. Trump is kind of using that to say that, hey, the jobs is weak. It wouldn't be this with me, kind of deal. Every last bit of political bargaining to get to the election and win, right? Anything that they can do and say, they're using it against the other one right now. And that's got a lot of volatility in the market as to what's going on and how a lot of these stocks are positioning. This whole earnings season, I think the trend was really about guidance. It wasn't even really about what the companies turned in as their homework, but it was really about where we're going from here. So some of them did have a little bit more, we finally improved the numbers in these different segments, and that moved up nicely. We saw that in Amazon. We saw web services coming back in strong. We saw that in Google with some of their spending and cloud. That was a big growth driver for them. So those two actually took off fairly nicely. Last week, I was saying those would have been two of the Magnificent Seven. There was actually only five reporting this week that I would have bought. The other one was Microsoft. That one did miss. Actually, the quarter was good, but guidance kind of missed. So we were looking at that pulling back, a lot of spending in AI, and a lot of investors didn't really care for that. So that did come down about 5%, something like that on Wednesday, Thursday. Meta also coming down, not as much, but giving a little bit of their gains back. And I'm looking at ARK Invest actually buying that dip and buying about $26 million worth of shares in Meta. I still think that is a strong business. I think that's got a decent amount of upside from where we're at. I won't give Kathy Wood any flack about buying Meta right now. I think that is actually a decent pickup for them. But the ARK Invest funds have been abysmal at best for the past 2 years. So hopefully, with growth a little bit more in focus after we get through this election, rates coming down, hopefully that can start changing around. But we've also seen a lot of issues in the bond market, which is kind of narrowing down what stocks are actually performing well right now. So we've had, the Fed funds rate actually get cut. That's the rate that banks use to exchange money overnight, that overnight rate. But it is not actually, the bond market is actually not being in agreement with what the Fed funds rate is actually doing. So the 10-year is moving up higher. It was like 4.3, I want to say that it was last check. and these numbers kind of keep rising. So even though that the Fed funds rate is coming down and the interest rates are being cut at the banks, the actual demand in the market is still high, and we're not seeing that drop that a lot of people expected to see. So those rates on borrowing, lending, 30-year mortgages, things like that are still going to remain elevated for a while until those actually start coming back down in line with what the Fed funds rate is trying to do and a cooling of the economy, but the economy is still strong. So it's kind of narrowing down what stocks people want to be in. People are running into safety or they're running to bonds. So yeah, you're seeing people like crowd into an Apple trade. You're seeing all those names really get a lot of volume in them. And some of the names that have been at a peak are actually coming back down. We saw Eli Lilly report, and that one was painful. They had Zepbound and Wegovy, and those names just did not perform the way that we thought they were going to. So I'm actually going to pull up the chart here for Eli Lilly. I'm just trying to get it all set up before I flip back over. Let's see if we can do this. We got E-Trade. Let me share that. All right, so we are looking at Eli Lilly. This is the 1 year. You can see this dip at the end. I will go out over the 5-day, and we'll see this massive sell-off from 900 down to, 775, something like that. Absolutely painful for Eli Lilly on that miss. And again, the guide was not that it's going to just straight rebound in the next quarter. So we're staying a little depressed here on these prices. It's not this quick rebound. We just oversold, and it's going to bounce right back up to 900. But I do think that these are still strong drugs. I think that the company is great. The pipeline is pretty strong. Management's been doing really well, but this thing has had a great run, and now they're giving a little bit back. So do we want to buy the dip, or do we have faith in these names and these pharmaceuticals that they're coming out with? Or is the election might going to play a little bit of a part of this? I think finally we have a little bit of nutrition on the election, with RFK Jr. potentially getting in and looking at the whole system, which I am a huge fan of, because the amount of chemicals and things that are added to our food supply here in the U.S. Since 1950, Europe has had 400 things be approved. Same with Canada. It's like 400 additives that have been approved. And in the U.S., it's 10,000. So all those things on the back of a label that you can't read, that they're too hard to say, all those chemicals that are being added, all the dyes, all the high fructose corn syrup, all those different things are going to be reviewed. And I think that's about time, right? We've had enough problems with metabolic diseases and heart disease and everything else that has been on the rise, whether it's cancer or autism or anything else linked to food supply. So it is, I think, time to look over that. And I think it's great that we're actually opening our eyes to the fact that maybe the Food and Drug Administration doesn't have our best interest at heart when, people that work for the Food and Drug Administration then go to work for a lot of these big corporations, and they're just kind of in their pocket. So interesting to see what happens there. I would really like some changes to happen and not have all these chemicals in our food going forward. That's probably could be a whole nother podcast, but I'm definitely glad to see that is at least being talked about. I'm not too sure how much traction it's going to get or which party's going to win. I'm not here to talk politics, but the fact that the nutrition in the country is actually being addressed, I think is huge and has huge implications about what happens to food, what happens to a lot of these companies, and then the pharmaceutical plays that happen after that. Maybe we don't need as much Wegovy and Zepbound if we actually get our food supply in check and have a lot of different changes there. Just my 2 cents. But yeah, so then we had Reddit, man. That was just next on my list. Kind of a weird segue, but that's okay. Reddit, man, they absolutely crushed it. And you can see on this chart here, yeah, the 1 year is pretty awesome. But if we look at the 5-day, you can see this huge gap up from like around 80 pushing to 120 up here. I think they had a 30 or 40% day. Just absolutely massive, the amount of sales that they had on advertising, the amount of customers or subscribers that they have that aren't actually on any other social media platforms. I think 30% of Reddit users don't use any other form of social media. So the amount of advertising dollars that is coming in to capture that market is just growing exponentially. The company reported just huge numbers, a lot more active users, just advertising that was off the charts, and definitely interested to see what happens there, although they are very open about the fact that they sell all their users' data, and anyone can kind of view what's going on and advertise to these people, and basically use it as a toll booth to these people come in, they pay for this amount of advertising, and that's how it goes. But I do think that the company is actually going to be profitable, which is crazy because then these were very tough to get started and very hard to fight some of the powers that be in the way of Facebook and Twitter, X, or TikTok, or whoever else. So Reddit is actually creating a community, and they are actually carving out their space in the market. So that's pretty cool to see. SMCI, man, this one is painful in the exact opposite direction of what Reddit has got going on. So they are being investigated on fraud and a bunch of other wrongdoings over there. And this thing just cratered. We were up near 50. We are now down to about 26. I see the amount of volume that is on the options market. People are betting for this thing to go under 15. Just the puts that people are buying is just very, very high. That is just a bet for this thing to continue falling. There's a lot of people saying it is going to be going bankrupt. Then there's more implications about what happens with an NVIDIA if someone like SMCI just closes their doors. So SMCI accounts for about 11% of NVIDIA's sales, right? That was, I think, the most recent report that I saw. So 11% of NVIDIA's sales go to SMCI. They buy a lot of NVIDIA product. What happens in that situation? So NVIDIA did trade down on this news. This was Wednesday for SMCI. I'm going to try to pull up the NVIDIA chart and see if we can't take a look what happened there. And kind of similar, we got this quick drop further down on Thursday with some of the other market shakeup going on. But so again, I don't know that this is going to actually crush NVIDIA, right? They have talked about the fact that they cannot keep up with the demand. They are just kind of cranking out supply, but they cannot keep up with the amount of demand that is out there. So if SMCI closes their doors tomorrow, I think other people start buying, buying these chips. And I don't think that NVIDIA has too much of a problem with it. So down here at, the low 130 mark, I think we found some support. We moved up off of that. And I'm going to probably zoom out a little bit here. If we look over 3 months, we had kind of a top at 130 here. We met a little bit of resistance, and then we broke through it, and then we came back down, and we kind of knocked on 130's door, and we were kind of bouncing higher off of that. Did we do this before? Let me look at the 6 month. 130. Yeah, we kind of had this resistance pattern here and here, and now we're trying to break through it. We're above it. I think unless something really cataclysmic happens, I think we stay above it for a while. Could be the election, could be anything else that slows this thing down. We are concerned about that as investors right now. What happens if we have a Trump election and he does have tariffs on all these companies that are actually U.S. companies, but they produce abroad, or even foreign companies that are bringing product into the country? Do we have those tariffs, right? Is NVIDIA going to be, tariffed or taxed for producing elsewhere? Is Lam Research going to be, taxed heavily because they are an American company, but they produce in Malaysia and Taiwan? What is Taiwan Semi going to have to do in order to really compete with the market? And are we going to be able to produce enough factories here in order to not really have a monopoly of semiconductor companies that are going to be able to compete and not just have a monopoly of one or maybe a duopoly of two or even three companies that are actually producing all the chips that the US would need. So that is, I guess further to be seen what happens there. The fact that, the tariff talk is still on the table is a little bit worrisome as investors. I think it makes sense for the country. We had those problems before of, relying on other countries to produce things that we really needed during times of need, times of war, or even our pharmaceutical supply that is produced abroad. That was actually very scary as well, as we needed a lot of these medications during COVID and we didn't have them. So a lot of different things there to take a look at. I talked about Google. Altria actually moved up really nicely as well. I think their sales beat. We had, let's take a look at the 5-day on Altria. Nice move up from them as well, right? So we had a stock that's yielding, 7.5%, 8.5%. They don't have as much upside, right? They're that cash cow. They're paying those dividends, but we're getting that 7.5%. So we don't have as much on the way of upside, but you're buying this one to have that dividend coming in. And it's nice to see that dividend check. We are kind of flat here on this recent report. We've got a couple new buy targets at 60, one saying it's a sell at 42. I don't see that with some of the numbers that they just announced and the sales growth that they actually did have. So 57, 60, 42, that's the low ball, 55 and 60. So even at a 55, you're still getting that 7.5% dividend. And you can probably rest easy with this one. It's not a very volatile company, and you have that safety of that dividend that they've been paying for eons at this point. I did look at what Buffett was buying. He was buying a new company called HEICO, HEICO. They are a competitor to SpaceX. That was kind of making some news here. So I was looking at that one. That had a little bit of upside. I'm not too sure what he's after on that one, or if he just thinks that is the next frontier, which normally he's not going too deep into the weeds to find stocks. He wants, what is the ticker I'm looking for? Archer Aviation. That is it. Second guessing myself here. ACHR. This one is still looking into that drone space and vertical takeoff company. A vertical takeoff plane company. Another competitor kind of in the space with a lot of upside. That the more speculative play that could certainly do something here in the coming years. One that I tried to play before, but this chart had this thing going down, so we were trying to trade in and out of it. Another one that I'm trying to trade in and out of has been Humasite. We've talked about that one a little bit. I am currently out of it. I've been buying it around 5 and trying to sell it around 550. And with the volatility here, that has actually been playing pretty well. But I might miss some of this upside if I keep selling it and making that 8 to 10, 12% margin or profit on trading it. So if this thing does get approved by the FDA, all the artificial veins, I believe is what they're doing, that is going to be a huge game changer for a lot of different heart surgeries or wounded warriors, a lot of different implications that they can have with this technology, and could be a big changer and truthfully a stock that could have a lot of upside going forward. And I think that that FDA announcement should be coming soon. We've been waiting for it for a couple months now. So this volatility is still bouncing back and forth, knowing what's going on here with HUMA. This week, quick little rundown of what I've been buying. I did buy some more Adobe. I have been trying to really ratchet back up my buying here in ADBE. They're leaning heavily into AI and really trying to get their imagery status higher with AI into their different programs that allow for photo creation, Photoshop, things like that. So I've been trying to buy this one. They have a lot of upside. They got traded down, probably towards the beginning of September, roughly, looking at this chart. And yeah, one that I think has a good amount of upside and fairly limited on the downside. So I've been buying this one, waiting for that turnaround. I don't know that I'm going to be in it forever, but I would like to be here for this run where I think we could easily get back up to 550, 560. We were up there probably closer to that July and September top, and I think we can get back there pretty quickly. So I'm waiting for that. Did buy some more Chevron. Again, Chevron, with that 4.5% dividend, decent amount of upside. This thing was trading down into the 140s. It did drop probably into the upper 130s. I definitely bought some there, but I bought a little bit more on the way back up as well. Target. I'm trying to buy some more Target as well. I know this one with the woke agenda has been problematic for a lot of people, but I think we got a decent amount of upside. The economy is staying stronger than a lot of people anticipated, and they're doing a lot of cost cutting to keep their prices in line with a lot of the other big players in the market. So I think that Target has a bright future. Stay out of the woke agenda, and I like the dividend there and the growth of this about 20% of upside that they have. Verizon, let's take a look. Yeah, about 13% of upside, and also a solid dividend here from Verizon. So a lot of the stocks that I've been looking to buy right now have traded down on some of this narrowing of the stock market and where money is piling into. But I am looking to get into a lot of these dividend plays. 6.5%. UPS was the next one that I've been purchasing. Good earnings report, decent guidance. Really rallied up and then came back down. They gave a lot of it back. So if I look at the 5-day, I'm not looking for volume. Show me just the chart here. I know we were up near 140. We came back down to about 133. I was buying in that 133 to 136 range. The chart's not working for some reason. But nonetheless, I'm still getting about this 4.8% dividend. I think we got a decent amount of upside. I think with the economy staying strong, shopping into the holidays should remain elevated. And I think they're going to be a winner. And like I said, they had a decent earnings. They went up higher. They've pulled back, and I am comfortable buying it with the dividend. I'm comfortable buying it where the economy sits and the price targets that are here on UPS. Micron, same story, guys. I still believe that Micron got beat down with some of the SMCI news, with some of the other fears in semis. And again, with the memory that they are in, a lot of that sales had bottomed out. And so they're sitting at a little bit more inventory. I do believe that they're going to rally back. And they still have a lot of demand in the AI space, as all these different companies have really pointed to. And they are building out some of that technology as well. So the couple things that they are in that haven't been selling too well, I do believe we get a rebound in that. I think that this 50% upside is completely possible. We've been up there before back in June, July, and I think we can get back up there real quick with the amount of demand that is still in the economy. So we got that one. Microsoft, I did buy that. Added a couple of shares. I still think that what they are doing is doing really well. Some of it had trended down on the fact that investors didn't like that they were spending more and more money on CapEx and in the AI space, but I believe that is a huge growth driver for them, and they have to keep up with what the competitors are doing. So I saw this as a buying opportunity. Some people said it was, it wasn't done falling, but man, if it goes down anymore, I'll probably still buy some more of it. So I am not opposed to buying now. And if it drops another 10, 20 points, I'll probably buy then as well. So at 410, we got around 20% of upside, average price target 496. The last one that I was buying this week, which seems like a busy week, but O Realty, under 60, I've been buying this one as well. So again, a monthly payer that has a decent amount of upside, huge safe dividend that they pay, like I said, monthly, 5.5% here. I'm comfortable buying it. I'm comfortable adding to it. I want to increase my dividend income. And some of these names are definitely on that list of dividend payers. Target, Verizon, UPS, Chevron. Those are all going to be, Target's probably the low one there, 3% to 6.5%. So I'm comfortable adding that mix of stocks, getting a little bit of growth from Adobe, Micron, and Microsoft. The other ones have, probably 10% of upside and, more in that dividend income. So they're paying me back in that, and I can either keep that in those stocks or invest it elsewhere. Right now, I'm just keeping the drip turned on, the dividend reinvestment program, and letting it buy more shares. We've got, what else did I have? Oh, Palantir. I did want to cover Palantir real quick. Palantir is a tricky stock, guys. Where do we sit? We were at probably around 45 on the 28th. So we did give some away here. This is tricky, right? I think that it's a great company long term. I think that this insider activity from Alex Karp, the CEO, is drawing a little bit of concern, right? Let me look at my notes here, just because I forgot the amount that he sold recently. It might be on here now. I was looking at it the other day, and the sale was not there. It's still not there. We had... This one is a little bit prior, right? Alex Karp, CEO, $256 million he sold on the 25th. But I'm looking at another report that says he sold $177 million just this past week. So that might not be reported yet. We had Peter Thiel selling $457 million. Peter Thiel sold $600 million. There was another Alex Karp sell down here, $325 million. So he sold, $750 million worth of stock over the past month and a half. And that's raising a lot of eyebrows as to what is going on and why he's selling so much. Well, is it the fact that they've had this just monumental tear of gains for the stock? Is it the fact that he thinks that I think earnings are coming out? Is it this week? Let me take a look here. Earnings come out on the 4th. Oh, they actually come out tomorrow. Are we going to miss? So there's a lot of different things that people are thinking. Is it something that he's just, buying a house? Is he, just cashing out? What's he doing? Is he buying into another company? There's a lot of questions around a $750 million sale, right? This isn't just buying one house or one yacht or whatever. This seems larger than that. So we're trying to get our heads wrapped around the fact that there is such a sell side presence from directors and the C-suite, and really try to figure out what to do with our shares. I'm still bullish long term. This PE is stretched, right? We're going to see that on a lot of these software companies, especially in the leading technologies in AI. But it does seem a little bit overvalued short term. Long term, I still think it is a great company. The amount of people that they are getting on board as customers is huge, and the amount of people they are adding is absolutely adding products to is huge. So we are looking at a decent amount of downside from these analysts, but man, I don't know. I don't know that I want to sell it. Maybe that's the wrong decision. I don't know, but it's definitely a case where we want to take a look at what the CEO is doing. We can probably draw a little bit from that. I'm just not going to go and sell off my shares right yet. And I also have a covered call written on them at 40. So if this thing drops down below 40 and the covered call expires, I should be fine. But, or I would be fine. But yeah, we really got to wait and see what the earnings announcement says going forward. I did have covered call written on Starbucks. I didn't think that this thing was going to get to 100 by this past Friday. It did not. We're at 98.87. So I've got this covered call that I wrote earlier this week. Pay me a little bit of money to write the covered call, and I keep the shares, and I'm going to do it again. Again, I don't know that I want to be in Starbucks forever. I don't know what the future of this thing holds. The CEO pulled guidance. We don't know what's going to happen with the future or how they're going to revitalize the business to get more people in the door, spending that $6, $7, $8 on one drink, we're also looking at a potential change in what the nutrition looks like, right? So the Frappuccino drinks that are bottled, a lot of people have been pointing at those, that they're terrible for you. The amount of sugar in them is so high. So a lot of people are pointing to the fact that maybe we shouldn't be having these on the market. Everyone's still going to have their choice. I don't know that they're going to get pulled tomorrow by any stretch, but I do think that we might have a change in, taste for the U.S. consumer. And is it going to be the same drinks? Or are they going to have the same demand if we pull all the sugar and people are more concerned about caffeine, this, that, the other? I don't know what that's going to bring. So there's a lot of uncertainty around that. But I think really for me is the fact that they pulled guidance and they're saying that they're really trying to figure out how to get people back in the door to pay these high prices on these drinks. So I think that's what I got there. We had the investing challenge for week 45. The 5 names were Visa, Nike, Citigroup, Micron, and Viking Therapeutics. Sorry, guys. I'm still very bullish on a couple of these names. I did buy more Micron this week. I told you guys that. I thought I bought more Viking. I think I did. I think I bought some more Viking as well. I don't know if that I wrote that one down. The one that I did not buy was Citigroup, but we will be buying that for the investing challenge. I think the people who wanted a dividend name won the vote this week, right? Viking didn't really have any dividend. Micron's next to nothing. Visa's about next to nothing. Nike's in there. I think some people are still worried about some of the different agendas that Nike's been pushing and the inventory concerns and what's going on in China. I do believe that the stimulus over there should start helping Nike. But buying Citigroup, we're getting about 3.5% of dividend. Still fairly valued. The 5-day coming down a little bit. We are closer to that top. But we still have a little bit of upside. Management's kind of getting their act together. So there's a lot of different reasons I can see to be buying Citigroup here. And about 15% upside, 3.5% dividend. I can't argue that. Where was Nike? Just out of curiosity. I think it might have been up there as well. 18%, but probably a little bit more uncertainty around that one right now. And so I am happy to be buying $200 worth of Citigroup, ticker C, to our investing challenge portfolio. Portfolio, which has been doing really well lately. We are moving well above where we had been. I think we're about 20% up. And when we started this thing in 2022, man, the first year we were down like 16%. So we've had like a 40% gain from there. We're up 19%, up $5,396 that we have made by simply investing $200 per week based on the results of a poll that the group has done. So some of the big winners right now: Broadcom up 200%, American Express up 96%. I didn't recall seeing that one. We had, I'm trying to leave out some of the 3 and 5% gainers. Google's up 57 or 58%. Hannon Armstrong, that one has done us pretty well. That's up 41%. A lot of people don't really recall that one. Iron Mountain, 120% gain. Johnson & Johnson, 9%. That thing is underperformed. JP Morgan up 45. NVIDIA has been our big gainer, though. NVIDIA is up small 265%. A lot of great picks here. QQQ, since we bought that, up 53%. So a lot of good buys. Some that have not really played out well for us. Walgreens Boots Alliance, man, that thing has just been awful. WBA, that does deserve to take a little bit of a further look at it. We're at 946. Average price target is 950. This thing was up in that $30, $40, $50 range, just chugging along that 4% dividend. And now it's at like a 10% dividend, but the dividend is not safe. The earnings are awful. A lot of problems there. I would not buy this thing right now. They're trying to sell off the Boots business in Europe. I don't think that the dividend's safe. There's no upside. It does not act like a company that it's been paying a huge dividend for for ages. It has really been problematic for anyone that's been in this thing. So I'm going to steer clear of it. We could probably get it out of the investing challenge. I don't know how much more downside is here, which is the only reason that I'm not just straight out selling it. I think that the downside is pretty much built in at this point, but it is really disheartening to see this company that has been churning along for so long now have that dividend in question, have their earnings in question, have their future really just it's a big unknown at this point. So I'm not buying that one. But we are looking at 5 different names for week 46. And somehow we're already in November. It is, back to daylight savings time being gone. And it's going to be getting dark early. And we're going to be wrapping out the end of the year. So stock one for this week, we are looking at a name that I just talked about, UPS. We bought it this time last year. I'm still comfortable buying it. The earnings were decent. The dividend is strong. There's a decent amount of upside. I think that the economy remains strong. So I'm comfortable buying this one. If you guys are, get your votes in at on Spotify, on Facebook, either of the groups, or on YouTube. We got all those different ways. UPS, I'm still a fan. Number 2 is going to be NVIDIA rival AMD. Really good amount of upside right now. Again, another company that had the semiconductor stocks pulling back this week. I think we get a decent entry point here. Again, I think we have a little bit of clarity about what happens for these stocks that produce abroad in the U.S. after Election Day. It might be a couple days or a week or two before we get the final election results. But hopefully we have a little bit more clarity by this coming Monday to know whether or not we want to be adding AMD to the mix. Number 3, CrowdStrike. A lot of people pointing to the fact that the CrowdStrike outage and the lawsuit with Delta is going to be solved, and they're not going to have to pay Delta for the fact of their outage that lasted for Delta a few days longer than everyone else that was using CrowdStrike. So a lot of their employment or their pilots, they didn't know where their crews were going for days after the outage. But CrowdStrike is pointing to the fact that was not on them. That was on their own software. So they're thinking that they're going to get away from this lawsuit more unscathed than we previously thought. So more people are looking at CrowdStrike as being still the leader in the space. It's always been that leader in the space, but owning it and holding it through all that turmoil was definitely tough. So I had sold out of this thing. I think I sold half at like 320 and then half of my stake at like 260 or 270. So I'm probably flat-ish about where it is right now. Maybe, a couple percent in the wrong direction. But overall, I'm still happy with my way to get out of this. It did drop down to like this 220-ish range. It was definitely difficult to hold your breath and buy right here. Might have been what we should have been doing, but there was still a lot of unknowns. So, yes, it's bounced back. I still think that we have a great company that had a lapse, and hopefully we can get this solved and not have these problems going forward, because it was definitely a big deal when it happened. So that is number 3. And is it safe to buy this thing now is basically the question. Going forward, Eli Lilly, we get a rare opportunity to buy Eli Lilly on this dip. Do we go ahead and make that play? Again, with everything going on with their earnings, Zepbound, Wegovy, not churning out the numbers that they wanted, we get this big sell-off about probably about 100 points. And do we want to go ahead and buy LLY on this dip? It's a tough call to know that this thing's going to rebound if we're going to have problems with other biosimilars coming out from Viking or from any of the other drug companies that are out there making the GLP-1s. Do they have a strong enough pipeline? Do we want to continue buying into this with the changes in healthcare that are going to be coming about? A lot of unknowns, right? So again, one that I think we should have a little bit more clarity this week as to who is going to be getting into office, whether or not it's going to be safe to buy into this one. And right now, we've got a lot of buy targets, even after their earnings in the 1,000, 1,100, 994, 1,029, 975. And look, we're sitting at 818. So, 1,000 is quite a bit higher from here. So I would be comfortable buying that. I would be comfortable taking that risk. I still think that these are going to be huge sellers for them going forward. And we'll just have to take a look as to what happens after the election and where we get a little bit of clarity on that. So that is number 4. Number 5, MicroStrategy. And yeah, it's a software company, but most of their business at this point is in Bitcoin, right? Bitcoin is their big player. Bitcoin has been on a run. Well, the volume that is in Bitcoin is only about 25% of the volume that they had last time Bitcoin got over 70,000. So I don't think that the retail investor is back into Bitcoin like we were before. I do think that some of that volume will start creeping back up as we reach these new highs. People are going to not want to miss out. I think there's going to be a lot of FOMO buying. And I think there's going to be a lot of volume out there in Bitcoin. So MicroStrategy, let me see if I can pull up how much Bitcoin MicroStrategy has. Let's take a look here. I'll go Google it real quick. MicroStrategy Bitcoin holdings. What do we got? They've got 9.9 billion on their Bitcoin holdings. I'm going to share this instead. We've got Bitcoin currently around a price of 69,000, worth around 17 billion. While the company is sitting on big gains now, its position didn't look so great in 22, 23 when Bitcoin fell to 17,000. So MicroStrategy is going to be one that is going to be heavily influenced by the price of Bitcoin. And we can kind of see that on this chart here as well. So Bitcoin runs up, from 17 to 60. And they get some pretty massive gains. But if we look at MicroStrategy, we're looking at a company that has had larger gains than that. So we were down at 22, and now we've 10x to 229. So Bitcoin has not 10x, right? Bitcoin didn't go from 17 to 170. They might have had 250, 300% of gains, but we did not have the same turnaround that MicroStrategy had. So I think if we want to play Bitcoin, MicroStrategy could be a decent way to buy that, get the gains out of Bitcoin. If Bitcoin does pump up to 100,000 or 120, I think you might actually see more gains out of MicroStrategy rather than simply holding Bitcoin. I still hold Bitcoin. I don't own any MicroStrategy, but I do think it's an interesting way to play that trend. So that is the 5 that I got for you guys this week. UPS, AMD, CrowdStrike, Eli Lilly, and MicroStrategy. We had a lot of different earnings going on this past week. We've got more earnings coming in this week. We've got an election to be concerned about. There is a lot of speed bumps that could be out there this week. So please stay tuned to the group on Facebook. I will try to post out some different need-to-know updates that are out there. And yeah, I guess hopefully we can, stay invested, stay with that clear plan and try to make some money this week, even though we know that it's going to be a bit hectic and crazy out there. So thank you guys for stopping by, and I will catch you in the next one. Take care.